And we are live. This is Travis from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. This is another episode 274 of Trade with Travis on TradingView on YouTube. Thanks for everybody that's watching on. Thanks for everybody that's watching on TradingView. Thanks for everybody that's watching on YouTube. Obviously, as we go through, take a look at some overall trading opportunities and be able to see if we can um, be able to find some opportunities to be able to get into some trades as of today. So let's go ahead and go through the disclaimer, and then after that, we'll get through everything else. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means making money yesterday is not promised that you're going to end up making money today. So with that being said, as we go through and be able to put everything together, and hopefully I can be able to get my dog to stop barking. Um, but we will go ahead and go through and take a look at what's going on with the economic calendar. Talk to everybody and see how was your overall day. Was it a trader's day? I mean, was it the green day? Was it the red day? Based off of what we did on Wednesday. I mean, based off of what we did on Tuesday and Wednesday. And kind of go from there. Everybody give me one quick second. Okay, we're back. There we go. Hope everybody's doing very well. Um, for the people that are online live, please let me know if you can be able to hear my sound. Let me know if my sound is pretty good, and we can be able to go from there. I'm um, sorry about all the barking. Obviously, my dog is. We kind of putting them up, and we end up getting some new. We end up getting a new couch, and we're trying to make sure that the dog doesn't use the bathroom on the couch or anything else like that. So trying to train him all over again. Um, so let's talk about what happened yesterday. Yesterday was a trader's day. Really, nothing much that ended up happening from an overall fundamentals perspective. We go into today. This is the second to last day of the overall month. I don't expect that we're going to end up having a lot more information that's going to end up pushing the market, and we'll go from there. Um, what's going on, Phil? What's going on? Watch my trader. Hope everything's going well with you. Um, we have GDP that's going to end up happening a little bit later on today at 12:30. That's going to end up being an annualized one. It's not going to end up being a very big one when it comes down to that. And then after that, the last day of the month, we're going to end up having a going to end up having a trader say as well. It's going to have retail sales from Germany. Going to end up having unemployment rate from Germany as well that we have to be able to pay attention to. All right, cool. So let's go ahead and jump right into the charts and be able to go from there. Let's see. We're going to start off with the United States dollar index charts. We're going to end up going United States dollar index. We're going to end up going oil. We're going to end up going gold. Take a look at Bitcoin. Take a look at what's happening with a few other charts. If there's any pairs that y'all would like to be able to look at that you're actively in trades right now, please make sure that you place it inside of the comment bar. We'll take a look at that as well. And let me know what position you're in, meaning that if you're in a buy position, sell position, it makes it a little bit easier to be able to help you out when it comes down to that. All right, so cool. Taking a look at it, United States dollar index, we take a look at this from a weekly perspective. You take a look at this large purple line, that is your inner trend line, meaning that this is the trend that the market has been on since 2021, and the market has been basically bullish. Now, there has been some ebbs and flows, but the market has basically been bullish. If we take a look at where the actual where we are right now from a candlestick perspective, we're actually breaking a little bit below it from a weekly perspective, but we have a new fractal high, which means that we have to move. We have to be able to move this overall candlestick again to be able to go to the new fractal high when it comes down to this, which allows us to be able to know that this market is still currently bullish overall. Could you give a chart to look at? I'm going to take a look at the ones that I typically look at first, and that'll kind of let me know which charts I need to look at kind of going afterwards, Phil. So looking at the United States dollar index and kind of seeing what's happening with that. That'll let me know if I need to be looking at possibly buying from a United States dollar perspective or selling or staying away. That's what I'm doing right now with this chart. But I pretty much do that with the first three, and then after that, I can kind of be able to know if we're going to look at U.S. based charts or Japanese based charts or whatever may be the case. But market was in consolidation, retested that consolidation, and currently we look like seems like the market is kind of falling to the downside overall. We go back to what happened yesterday, just based off of that movement. There really wasn't much to be able to pay attention to. Like I ended up saying at the beginning of the week, I wasn't necessarily looking at being able to make a big move off the United States dollar and kind of picking a direction solely because we've seen that on the weekly that the market was in a sell zone and the daily that the market was in a buy zone, which means that you're going to see a lot of consolidation. You're not going to see that much trading because there's indecision in the market. And that's kind of currently what's going to happen overall when it comes down to this one. Yesterday wasn't necessarily a big move. We've seen the market kind of break down, but the buyers truly got back into it. So weekly's in the sell zone, daily's in the buy zone. That means that we have no time frame correlation. Because of that, I'm going to end up passing on the United States dollar index, at least for right now. Could never watch you before. What sort of trader are you? So I trade three different ways. The first way is what you're looking at. I'm more of a swing trader by nature, being able to take a look at it. And if the market is truly trending, then I do ABCD. So basically looking at Fibonacci's to be able to look at the retracement to extensions. We take a look at then after that, depending on if the market is in a large consolidation, I end up taking a look at breakouts. That's when I look at the trade view charts. Take a look at high volume nodes, low volume nodes. I try to take advantage of the low volume nodes and being able to trade those. So when we get into NAS 100, US 30, I trade more breakouts of consolidation going into low volume nodes when it comes down to that. And then after that, obviously, I have my automated systems. My automated systems do more of my scalping strategies. So me personally, I trade more of a scalper. The systems that I build as okay. Let me say that again. Me personally, I trade as a swing trader, and for my automated systems, I have my automated systems trade as scalpers. So try to be a little bit more balanced when it comes down to that. All right. So oil. We said United States dollar index, some kind of weight, and that means that pretty much if you take a look at it, the market is kind of sideways, which means that the United States dollar index, United States dollar based pairs are probably going to be a little bit more sideways today. From an oil standpoint, the market was in a large consolidation since November of last year, where the market was in this range of $82.50 per barrel and $70 per barrel. Last week, we ended up finally getting a trade on this one. It broke down to the downside. We took it all the way down to $64 a barrel. Before being able to get out. The market has popped right back inside of this yellow consolidation that you're looking at right here. I'm going to put a circle around it so everybody can be able to see it. And currently right now, the market's basically back inside of the middle of that consolidation. Because of that reason, oil's off the table again. Because now we have a 33% chance of being able to win overall. But there is a solid chance that the market is going to end up pushing up to 82.50. It's just going to do it without me because this is basically where probably the biggest high volume node that we're probably going to end up seeing from oil has been over the course of the last couple of years. Is just in consolidation. It's just ranging right now. All right, so nothing to be able to do from a direction standpoint. Let's take a look at gold. So gold is pretty much in the same position. The only difference is that gold has not reached the overall high of the range. The high of the range was right around 2070. It ended up happening early in April 2020. It happened again right when the Russian-Ukraine war actually ended up starting. And currently, right now, since the early portions of October, the market was at 1600. It pushed all the way up to 2000, and since then, the market has rejected slightly. Now, with that being said, we can see that from a stochastic perspective, we're in the middle or the no trade zone of the stochastic. And that also means that we're in the middle of this overall consolidation. I would be more bullish, meaning that I would look at being able to buy. But currently right now, if we take a look at it from a daily perspective, we're starting to see a little bit of a triangle starting to form right here. You'll probably see it a little bit better based off of a 2 hour, but a 2 hour From a 2 hour perspective, I'm starting to see a little bit of this starting to form, which means that it's going to take a little bit of time to kind of develop overall. There goes that flag pattern that's happening. So as this market stays in consolidation, that means that we're going to have to wait a little bit once again, unfortunately. But that kind of makes sense. So if we go through a 5 week process of March, this in general, we end up having solid trading at the beginning of the week, definitely last week when GDP ended up coming out. So this is just more of a recovery week when it comes down to trading. That was a solid answer. I only started trading long term, reading the book, listening to podcasts. Do you have many losses um, doing the trading that you do? Um, to answer your question, everybody has losses. I think everybody's blown an account or two before. Um, I think the biggest thing more than anything else is that obviously you're staying in the game. You get better when it comes down to your education, and you're very, um, and you kind of hone into what your strategy actually is. If it doesn't meet your overall requirements when it comes down to getting into a trade, then you don't take the trade. So typically, kind of going back to what I've done before, I look at trending markets only when it comes down to swing trading. I look for time frame alignment. We just talked about that with the United States dollar index, where the weekly and the daily have to be trading in the same direction. Then after that, once they are trading in the same direction, then I look at overbought and oversold stochastics that match up with that direction. If we do have a trade from there, then after that, we'll look for a catalyst. That means that we're looking for a counter trend line break with economic news to be able to get in. And then after that, obviously, when you take any trade, your risk versus reward has to be good. Um, from a swing trader perspective, career long I've been right around 45%. From a scalping perspective, I've been right around 85%. Um, that's from a 7 year. That's a 7 year perspective. But gold right now, middle of consolidation. Looking at this triangle, I let this triangle kind of play itself out before kind of jumping into any other move at this point. Um, Basically, it's in the middle of this consolidation, so it makes it a 50-50 chance for us being able to trade. And I don't like having the odds against me. Okay, so let's go to Bitcoin real quick because we're seeing a lot of United States base just telling us that we should not be looking at being able to trade United States base pairs as of yet. On Tuesday, when we start looking at consolidation on Tuesday when we're looking at consolidation, what's going on, Block? We end up talking about, or we were looking for one thing. That was going back to what we said last week. We were looking for the market to be able to break past 25,000. Once it broke past 25,000, we ended up having a solid thought process that the market was going to flow up to 29,000 very easily. That has happened. That has came and went. If you did not make those trades, then you kind of missed the boat when it came down to that movement. The reason why we said 25 to 29 was going to end up being a very quick and solid area was because if we take a look at when the market made that first move in 2020 from 25,000 to 29, it only took 2 days. Going back down in early May, it ended up falling from 29,000 back to 18,000 basically in 2 weeks. And then after that, we ended up having another 2 weeks of overall movement to the upside when it came down to this. So that move has already happened on Bitcoin as of yet. If you missed the move, this is the next thing that we need to pay attention to. This market has broken out of consolidation to the upside. Now the sellers actually end up selling it back down, but this is a little bit different. We can see that as of yesterday, the market actually ended up pushing past, and it looks like we're closing above this 28,550 number. Because of that, I actually think that buying right here, once we end up having a counter trend line break, will kind of end up being a good move to be able to do. Um, and kind of being able to say, hey, this is the position where the market's going to kind of hold and stay above 29,000. Now, to me, 29,000 is the mark that once it breaks above that overall area, then I think it's going to stay above that overall area for the foreseeable future. So you did not get in when the market was at 16,000 or when the market was at 20,000 when we started talking about it a little bit earlier. I don't know. I don't know if you're going to catch another time if the market breaks above 28, let's say 28,600, and stay above it. So please keep your eyes active when it comes down to this. What I'm looking for is this: the market has broke above this consolidation and starting to rest above it. As long as it breaks above, and then after that, breaks the counter trend line break, give us a little bit of chance to be able to jump in. I would look at being able to jump in or add more in on buy trades from this 28.5 number. After it gets to 29, then we go back and we start taking a look at this large consolidation that ended up happening before. We'll be back inside of this area. So we're talking about from 29,000 all the way back up to this, all the way back up to 39,000 will probably end up being the next move. So from 29 to 30 to 39,000 will probably be the next move. Do you think the overall market will pick up with crypto this year? Um, So keep in mind that typically the biggest push that Bitcoin typically has is from March all the way until June. And then after that it slows down and then it picks back up in October and then it goes from October to January. Um, this market hasn't made a very solid move this year. It's done pushed out of consolidation, but it hasn't made a very solid move overall. So I do think there's still a little bit of steam that may be left, but the only way that we can truly know the Bitcoin is going to end up making a big move is kind of seeing what's going to happen with the United States dollar. If the United States dollar starts to falter and everything else like that, just like what people do with gold, they'll start being able to take their money out of that and put it back into riskier assets to be able to make money. So I'm kind of jumping around the question to say that there's a good chance that it could, but I'm not holding my breath. Okay, so US 30. US 30 has been on a rampage since breaking out of this consolidation a little bit earlier. We can see from an Ikomoku standpoint that the market is bullish, and we're starting to jump back into this consolidation that we end up having from November all the way until we broke out until early March when it came down to that movement. So we're back inside of this consolidation. It looks kind of exactly like what's happening with oil, where the market ended up breaking to the downside and kind of breaking back inside of this overall area again. Now, from a high volume node standpoint, we're talking about from an hourly standpoint, the market ended up breaking out, pushing back up. It's up near the point of control. If you look at price where it is right now, it's literally by the point of control at the highest volume when it comes down to that push. I do expect when we take a look at what happens today, based off of this market being able to have so big of a push yesterday, um, in the last couple of days, to be honest, um, that the market will start to move up towards this little blue area. That blue area was the midpoint line, or basically that midpoint area. The reason why I'm saying that is because remember we were looking at being able to place orders as soon as it broke past 32,850, thinking that the market would go into this low volume node area right here and being able to push all the way up to 33,000. So we end up saying legitimately from 32.5 up to 33,000 was probably going to end up being the area where you'll probably end up having the most success. Did not take the trade on it just because of I thought I liked Nas a little bit more when it came down to that movement. But if I'm taking a look at this from a 15-minute perspective, the biggest thing that I would look at is um, one, can we get a counter trend line break first? Can we see this market have a little bit of retracement first before jumping in, kind of like what happened right here, where the market broke and then after that had a retest and then pushed back up? Um, this is completing a de-extension right now, and because it is completing the de-extension, I'm not going to jump in as of yet. Once that de-extension is completed, then after that we can be able to jump in with feeling a little bit more comfortable about the move. Um, take a look at this from a Fibonacci perspective, and then after that, kind of get a better idea. For people that are new, I do apologize about my charts. This is about 9 months of overall charting on here and kind of being able to make a lot of sense out of it. Okay, so go back to the hour and let's take a look at Fibs. Okay, so from a Fib perspective, there goes your A, here goes your B. Market fell all the way down to the 618, which was right around that 30,000, 31,870 number, which was down here. There goes your C. Because market ended up retracing to the green area, then that means that it will extend to a green area, which makes it 32,300. Remember, we ended up saying 33,000 as the overall number. Reason why we said that was because that's the midpoint of the consolidation that ended up happening right around this overall area. I do believe that the market will get up to the midpoint first before being able to make a movement to the downside. So that means to me we only should be looking at buying. From a 15-minute perspective, we do not have an opportunity to be able to jump in as of yet. Um, and I think that we might have missed this boat if we're being honest. The reason why I'm saying that is because, let's see, let's see if I can get a little bit more information. Okay, so this is where we currently are. This is how much we're trying to go after right now at this point. I would I would love to be able to see that this market has a little bit of retracement right around that 830 time, and then kind of make a move like this, push up, have a little bit of retracement. From that retracement, give us a counter trend line break to be able to get back in. Jumping in right now, we don't have a good risk versus reward. Um, but I would love to be able to see that happen overall. I'm not going to jump into it yet because once again we're chasing after the highest price, and I do believe that the market will follow a little bit first. But that would be the thing that I'll be kind of hoping for. I want the market to be able to fall so I can be able to jump in. Okay, last one, Nas 100. So Nas has finally broken out of consolidation, which is a better thing. That consolidation ended up happening from early March of the 21st, and then currently right now we're seeing that it's breaking out. I think that we have a better chance of being able to get into this trade and making a move. Let's see where it's going to go though. So going back to Fibs, what's your thought on XRP daily and weekly? One big cap making a move right now. I'll take a look at that one. So long term perspective, I'm going to change this color a little bit so everybody can be able to see it. I'm going to make it black so everybody can be able to see it. This is your fibs off of this one. There goes your A. The market ended up pushing up to 12,882, which made your B. Fell all the way down to the 618, which was right around 11,850, which is your C. Currently, right now, the market is above the overall B and it's breaking out of consolidation. The only trade that you should be looking for is buy trades. The D extension is at 13,940. If we go back and we take a look at this from a 4 hour perspective to kind of get a little bit more information, we are in a low volume node. If you take a look at it currently right now, I think that today we're probably going to end up seeing a big push from where we are up to possibly right around 13,120. If it breaks past that area, then I believe that it can be able to push up to 13,800 um, with relative ease when it comes down to that position. So looking at buying, the question is, can we get a good position to be able to get in? Can we get any value for us being able to get in? So this is where we're at. Market was in consolidation, has broken out of consolidation. From here, we have a breakout, but we don't have a retest. From a 15-minute perspective, I think that we will get a retest. And after that retest, I'm looking at a counter trend line break for us being able to get in. Okay, so there goes your breakout. I will look for the market to be able to fall and turn past resistance, turn into a future support, or it may break down just slightly back inside of this box. As soon as it turns around and makes that move based off of a counter trend line break, that's when I'm looking at being able to make my entry. Okay, so Phil, to be able to answer your questions, that's the way I trade. Unless I can be able to catch it right when it breaks out, and I didn't place in a pending order right when it broke out. But this is what I'm looking for next for this move. I don't obviously I don't think it's going to happen right now. We probably might see it happen a little bit later on today. But the 1 hour is in the sell zone, so I do expect that in the next 8 to 10 hours we will get a move to be able to jump into. And from that perspective, I will be looking at buying. Okay. We end up saying XRP. We'll take a look at that one. Then after that, we'll jump out of here and kind of move from there. Let's see, XRP versus block. Knowing you probably do it versus United States dollar. Um, uh, let's take a look at this one. Bitsnap. Okay, let's take a look at Bitsnap. Okay, perfect. So going back to what we ended up saying with going back to what we ended up talking about before with Bitcoin. Remember, we ended up saying that Bitcoin was at that 16,000 area, and then after that broke out and finally started being able to make its move. So this is the high volume node that it ended up breaking out of. Obviously, we can see that when it broke out of this area, retest, broke out, there goes your retest, and then after that started to be able to make its movement. Um, the same thing ended up happening with Bitcoin overall. It's just that obviously Bitcoin is the major player. So obviously the direction or what we're trying to do is just buy what we're trying to buy with buy being able to get the best value that we can. So from a hourly standpoint, I want to take a look at fibs and then after that we'll jump into everything else. So here a BCD. Went all the way down to the red, completed all the way up here. Large move right there. That's the second fib. Here goes the third fib. It just completed that third fib movement. What was that? Yesterday. Yeah, completed the third fib movement all the way up to 56.92. Now let's go through the next phase of this movement because this market is going through the fourth Fibonacci move off of this one. So here goes your A, there goes your B. The market fell all the way down to it did not go to the 382, which would have been at 51.85, which means that we're probably going to see an 80-20 rule. So it would not surprise me that the market may get up to 65 cents and then after that start to kind of tail off just from a Fibonacci perspective right here. Now, let's back that up with more information. Let's take a look at that from a buying perspective and see if that makes sense. Let's say 55 cents was the historical level of support before COVID crash. $0.55. I want to let me put a point. I totally agree with that. Block. Obviously, we can see it from here and here. Okay. Okay, so I can make this. I can make this easier. I can make this easier on what we're about to say. Um, I know we got a lot of information right here in the middle, but I just want everybody to kind of focus over to the right a little bit. Um, Currently, right now, the next biggest high volume node where we have 201 million, where we had 201 million of overall activity is right here. Um, that low price of that is at 60, um, basically at 60 cents. Um, so that's where the market is going to end up eventually going. I think it's going to end up pushing up towards 60 cents, have a little bit of have a little bit of problems trying to break past it, and then after that, once it breaks past, then I think 70 cents is very much on the way, and then after that, I think it'll gradually slow down. Um, that's just from a high volume node perspective. Just taking a look at that. Uh, let's see. More information will probably give us a better um, idea. Yeah, 60 cents is the next move. It was in this high volume node. It broke out. The next high volume node that it's going to go to is right here, which is right around that line. The lowest price in that overall area is right around 60 cents. I think that that's where it's going to go. Now is okay. We have that information. Can we use that information to our advantage? There's a counter trend line break currently right now that's happening based off of the 4 hour, and it's in the buy zone with a counter trend line break. All good things, very good things. It took us about 30 minutes to be able to find a trade, but I like what I see. Um, there goes your break right there. If I'm taking this trade, um, now it kind of goes back to, do I want to wait for a retracement off of this one? I don't think that's necessary off of this one, because if it does fall down, it's going to only fall down to 54,000. Um, it may only fall down to 54,007. I mean, not 54,000, 5470 before truly making a move, unless it's in consolidation. Um, and the only reason why I say that might be in consolidation is because it hasn't been able to break out of this level yet. So catch your trade anywhere around 55 is the area where I would say looking at being able to buy. If the market ends up closing above this area, then I would look at being able to say, hey, I'm looking at being able to buy with my stop loss being below 52, 52.85. So ideally, trade would look something like this. Buy trade will be up here. A stop loss will end up being, we have to make it go below that low. So I'm going to say right here, 51.20, 51.20, taking us all the way up to 60 cents. I got a 1-to-1 risk reward ratio. Might have to cut that one a little bit. Let's see. Let's make it below the support. Okay, put it at 52 cents. That's 1 to 1.5. Yeah. The best risk reward would be taking it all the way up to the 382, but kind of like what I said before, it will get to 60 cents, and I think it'll end up kind of struggling to be able to break past it for a couple of days. So the best move would be to that. It's a 1-to-1 risk reward factor. I don't like taking that. I like taking 1 to 2.3s at least. Um, but on this one, block, I think beggars can't be choosers on this one. If you're gonna take it, then go with a 1% risk, but still look at being able to take it. That's unfortunate. I wish could have get better risk versus reward on this one. I'll come back to this one. I'm not gonna pull the trigger off a 1-to-1 risk reward. Not yet. Um, Ski, what's going on? Everybody, if you like what I end up doing, please make sure that you end up clicking on that boost button. Make sure that you end up subscribing to what we end up doing on YouTube. We're going to end up having a video on the Expert Advisor Reviews, which is another YouTube page that I have. What we're going to end up I end up basically reviewing expert advisors and go through the deep dive of being able to understand what's happening um, based off of those ones, and seeing if it's worth your time and money to be able to place in. If you're interested in being able to learn a little bit more about that, let's go to Expert Advisor Reviews on YouTube. Slowly and gradually moving up. We're getting close to 1,000 subscribers off of that one. Super happy about that movement when it came down to that. Like always, make sure that you end up planning your trade. Trade your plan. I'll see each and every one of y'all in the next video. Take it easy.